here it is. Here's everything you need to know about the 3 main types of life insurance and which type I think is the best. All right, so let's just start with the easy one, term life insurance. This is basically death insurance. It only covers you for your life. The only time it gets paid out is when you die, right? This is just like car insurance. It's just like homeowners insurance or any kind of insurance you've had where you only use it when it actually happens, which of course means you don't get paid anything. You get paid when you die. Here's the good news about term life insurance. It's cheap. You can get various terms. It could be 10-year term, 15, 20, or 30-year type of terms. But the thing is, it only covers you for that term period of your life. So if you get a 10-year term, which is the cheapest, great. Well, you're gonna have to renew it or get another one 10 years later. But if your health changes, here's the downfall with that. You could actually be uninsurable and not be able to get any life insurance to protect you and or your family. So just be aware that that term, although it's cheaper, is more of a temporary solution, which is why people get it. It's cheap and it's easy to use. Just so you know, bonus tip here, less than 1% of all term insurance policies ever pay out. Why? Because the insurance companies love term life insurance. The reason it's cheap is because it never pays out. And so insurance companies love it because it's their number one profitable product. So again, it's good to use, especially if you're paycheck to paycheck, but it may not be the best solution long term. The second one's universal life. Universal life is kind of like buy a term and invest the difference all in one. Now, universal life, there's various types. The most popular that's starting to happen now, besides variable universal life, is now called indexed universal life, which means they set the returns to an index. Now, you have the death benefit, just like term life insurance, you have that, but they also have a separate account. It's like a savings account that's tax-free. They call it cash value. That's a separate part of it. Now, you always have the death benefit there, and that's part of it, of course, but you also have this living benefit. So it's not just death insurance, there's a little bit of life insurance in the sense that there's cash that you could be using while you're alive. This is like your own savings account that you can be using. There's some different aspects of this that make it more limited. They do have things like surrender fees you gotta watch out for. Of course, costs are coming out of it. So not everything's going to this cash account. Whatever's left over above and beyond the insurance costs goes to that account. That could be used to maybe supplement your retirement. It could be used to do things that way. But just remember, one of the things about this is that although it can set itself to like an index with index universal life, for example, it could set it to like the S&P 500, the stock market. The cool thing about it is that certain ones like index universal life will have a cap of how much you can make, but also there's a floor. So if the market goes down, you don't lose money. Now, if you have variable universal life insurance, if the market goes down, you can actually lose money and actually lose your entire life insurance policy if you don't keep funding more into it than you thought you were going to have to. So be aware that because of the costs going up every year in those policies, they're kind of like term life, the costs do go up. And although you do have this cash savings account over here, if you tie it to a stock market and things go south, you could actually lose money in these things. So just be aware of that. It is more expensive than term life insurance. That's the thing, because more of it's going to cash too, but it is flexible. They have flexible premiums, so you can pay little or a lot. All right, the third one is whole life insurance. Whole life insurance is pretty boring. Similar to universal life, there's a death benefit and there's this cash value, this tax-free savings account that you can use. The difference is with whole life is that it's not tied to any markets. It is simply just paying you dividends. Right now, you're seeing companies pay usually at least 5 or 6% a year on that money. So it's more expensive up front in most cases than universal life insurance because they front load their charges, but then it gets cheaper over time. So it does the opposite. Remember, with term life or universal life, it gets more expensive as you get older. With whole life, it's more expensive up front and then it gets cheaper as you get a little bit older. So there's different ways it's all done. It's not all the same. Every company has their own unique things, but whole life is designed to cover you for your entire whole life. As long as the premiums are paid, you will always have coverage. Doesn't matter what the markets do, doesn't matter. It's very simple, it's guaranteed. Most of the guarantees are at least 2 or 3% a year that you're gonna earn on that money. And it's essentially just that. It's gonna cover your whole life. It could be the most expensive life insurance policy that you have. Now, there are ways to design these whole life policies to be more like universal life where there's some flexibility. But that's more like what we talk about with, like when I talk about max ROI, infinite banking and things like that, where you can actually design the whole life to be a little bit more flexible, have lower insurance costs, have more going to that cash value account. So it acts a little more like universal life, but it actually could end up making you more money than universal life. Now, if you want to know which one I think is best, I really think it depends on the situation. Term life, I think, is best if you're living paycheck to paycheck. If you're not able to save at least $5,000 or $10,000 a year, do not do universal or whole life insurance. Just go with a simple term life insurance. But remember, it's temporary. And by the way, bonus tip here, if you know of a good company that has a good whole life policy, for example, you may want to get their term life insurance that's convertible so that you don't have to requalify your health later on. Now, universal life, is there a good time for that? There is, there can be. Now, I will say in general, I've seen a lot of dangers with them, especially because I used to sell universal life and I saw what happened firsthand when markets didn't do so hot. However, I will say this, when I get people coming to me and they're in their 70s and they're trying to find an affordable way because term insurance is no longer an option, and whole life just might be a little bit more expensive and they need some, some freedom, maybe a little flexibility on the premium, universal life might be a cheaper option for them. They won't really build any cash, but at least they'll get covered for potentially their whole life. So personally, I love whole life insurance because I could actually use it not just for a guaranteed death benefit to protect my family, not just because I don't have to worry about stock markets or anything else, but because I can actually get this money to pay me twice when I invest with it. So that's the cool thing. Again, it's not an investment, but I can use the cash from that policy and invest it wherever I want, like in real estate or in my business or wherever it might be, and actually get my money to pay me in two places at the same time. Now, this is not a very popular thing. There's a lot of people out there talking about infinite banking. Some people love it, other people hate it, like Dave Ramsey. Well, you know what? Check out this next video where Dave Ramsey absolutely destroys this infinite banking concept.